So not too long ago, just before the announcement of Charlie Munger selling half his stake in Alibaba, Munger actually floated this assumption during Daily Journal's annual shareholders meeting that objectively speaking, Alibaba might not be as entrenched compared to the likes of other internet giants such as Apple or Google. Furthermore, the internet industry is an incredibly competitive space. Today, you might be first, tomorrow, you might be forgotten. So don't count your chickens too early, and it's always day one, if you know where I'm referencing it from. So in short, Alibaba's competitive advantage is subpar compared to its competitor. Then it gets people wondering, why would Munger put money into a business with a lousier competitive advantage? Lousier with a quote, of course. You know what is a better competitive advantage? Smashing that like button, of course. It definitely helps me with my competitiveness. So let's see if we can get this video to 10 likes. Now, let's understand from Munger himself.
And he says, Charlie, Alibaba is a top 3 holding for you. It sells at a steep discount to its US peers. Best comparable is Amazon, which is triple Alibaba's PE. So what discount should US investors seek when buying Chinese stocks, considering the political, regulatory, and especially the ownership structure risk? Oh, and considering the fortune Berkshire made on your BYD suggestion, why doesn't Buffett buy Alibaba?
Warren, like many other intelligent people, likes to invest where he's personally comfortable. And for some reason, I'm more comfortable with the Chinese than he is. That's a minor difference. But I have all kinds of places where I'm just like Warren. I have all kinds of things where I'm not comfortable, and I just don't go near them. I don't think Alibaba is as entrenched as something like Apple and Alphabet. I think the internet is going to be a very competitive place, even if you're a big internet retailer. Well, we did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China.
Let's get this straight. Alibaba is arguably a lousier business if we benchmark it against its competitors. But Munger claims that Chinese enterprises yield more strength per dollar. What exactly is going on, and what is he talking about? Now, the easy explanation is there is a price to everything. Whenever we are looking at any stock symbol listed on any exchange, let's not forget that we are buying a share of that underlying business. So behind the various businesses, the employees, revenues, profits, etc. However, on top of just the business operations alone, we are also paying a certain valuation of the company today. So if we can objectively come to a conclusion that Apple is the best company in the world, based on all financial metrics in the world and the strength of its economic moat, are we going to pay a $30 trillion valuation for it today? We shall let the market decide. But let's not forget why valuation matters. It's not just an arbitrary number that people pull out from their asses and say that, okay, today we think that Apple is worth 3 trillion and that's why it's 3 trillion. It's always a function of the present value of all future cash flows that potentially can be generated from the business operations and their future undertakings. So if the prospects of Apple suddenly changes for the better, where they are currently pushing into maybe even electric vehicle, sure, Apple might really be worth 30 trillion today. So there are always two aspects to looking at the businesses, either qualitatively or quantitatively. So it then sparked an age-old debate on whether you should buy a great company at a fair price, which suggests that you put more emphasis on the quality of the businesses and its economic moat, or do you buy a fair company at a great price, where you put more emphasis on the valuation of the business. So of course, every single investors out there will tell you that they want a great company at a great price, and usually we'll just keep waiting for God to give us something like that. So do take note though, for most investors, including myself, after we take a particular position in a company, we automatically get brainwashed into thinking that whatever we have in our portfolio are all great companies, so don't get duped by us. Now, Munger's point is simple. He acknowledges that Alibaba might not be as entrenched and might have a smaller moat compared to others, but he takes into account their current valuation and measures it based on the relative strength yielded on each dollar he invests in. So long story short, Munger is just measuring the efficacy of his deployed capital and where he can find the best use of his capital in today's market. So I think it is also timely to reiterate the lesson Warren Buffett gave during Berkshire's last annual meeting in 2021. So the good old Oracle from Omaha put out a list of 20 biggest stocks by market cap in the world in 1989 and showed it to the audience. So out of the list of 20 companies, none, 0 of the companies are still in the list of being top 20 today. So this list of companies included the Industrial Bank of Japan, Exxon, General Electric, and IBM. Oil and gas companies were the bomb in the 90s, and tech companies seem to be the new wave that took over. So would there be another industry that takes over tech? Your guess is as good as mine. So he then added that we were just as sure of ourselves and Wall Street was in 1989 as we are today. But the world can change in very, very dramatic ways. Then this begs the question, would this time be different? So I really don't know. Personally, I think history would repeat itself again, but I'm not the oracle. So many people are constantly chanting and pounding hard on their chest, saying that X company or Y company will take over the world and would be the game changer. So valuations don't matter because it's the best company in the world. So if that really comes to fruition, I'm happy for you. But can there really be a best company in the world in a sustained manner for a long period of time of maybe, let's say, more than 20 years? We shall keep our eyes peeled for what is to come. So here comes the real kicker. Should we and must we invest only in the best of the best? So like I alluded previously, investing is a lot more of an art than a science of just crunching data and making projections. Both the qualitative and quantitative aspect of the business is important. So it is then up to you to decide as an investor on how do you systematically break down and place more emphasis on. Clearly, there is no surefire way to 100% beat the index because evidently, more than 90% of the fund managers with their professional career out there don't even outperform the market. And as retail investors, we just have a high level of ego and we always want to give it a shot, right? However, you know what has 100% ROI? Smashing that like button and signing up for credit card rewards. So from now till 4th of May 2022, if you sign up for a Standard Chartered Smart Card, you'll receive an AirPods Pro for free and you get to enjoy up to 6% cashback in the forms of reward points with no minimum spending required. Furthermore, there is no annual fees attached to it and you get 3 months of Disney Plus subscription. No hate on Netflix by the way, I'm subscribed to both Netflix and Disney. Anyway, you can head down to the link below to sign up for a Standard Chartered Smart Card today and you just have to spend minimally $350 within 30 days of the card approval. Don't let this 100% ROI deal get away and it expires on the 4th of May. Now, back to the main question with all the different bad sentiments surrounding Alibaba. Arguably, a subpar or even a non-existing economic moat, a strong overhang of the Chinese government behind the scenes, and a business with huge challenges laid out in front of them. Is Alibaba still a good buy? I think actions do speak louder than words, and you guys should already know my answer. Fundamentally though, Alibaba as a business has already proven itself over the last 20 years with a decent enough track record. On challenges ahead, which company has it easy? On sentiments, it's something out of our control. On the wideness of its economic moat, it might not be the best, but I don't think we should totally discount the 1 billion active users and growing prospect as a company beyond hope. So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!